When the Modi government took over, it experienced high inflation, high fiscal deficit, and a lot of challenges in the economy. The expectations were that the government will deliver really high growth and may touch double digits according to the economic survey. So we look at a number of issues, how the government has done on all these areas. One of the biggest achievements of the government has been the implementation of the goods and services tax. This is the biggest indirect tax reform in Indian economy. It was marred by implementation challenges initially, but now seems to have stabilized. On the direct taxes front, the government has achieved record collections of over rupees 10 lakh crores in the year 2017-18, which is a jump of about 18%. And the number of taxpayers have also risen. The returns filed have increased to 6.84 crore in 2017-18 from 5.43 crores in 2016-17. As in the FDI flows crossed $60 billion in year 2016-17 and have crossed $48 billion in the first 9 months of 2017-18. So this has been accompanied by relaxation in FDI rules in number of sectors, including sensitive ones like defense and aviation. But the government has been burdened by challenges on the banking sector. To address that, they have announced 3 measures in the 4-year period. First was the Indradhanush plan of reforms, which included capital infusion into public sector banks and also some managerial level changes. And then recently, last year, the government announced a mega recapitalization plan which involved 2.11 lakh crore of capital infusion. On the energy sector, if one were to see that auctioning of natural resources and deregulation of diesel prices have been the key success areas. On the fiscal deficit front, the government came with a high fiscal deficit of over 4%. It has been brought down, but the government has been below its own target and is projecting a deficit of 3.3% of GDP for the current year. For the last year, it has been brought down to 3.5% of the GDP. The government implemented the insolvency and bankruptcy code, under which rupees 4 lakh crore worth of stressed assets are undergoing resolution. The first big case has been resolved so far. The government introduced the fixed term employment concept, which helps industries needing seasonal employees get employees on fixed term basis, and then it also absolves them of the problem of hiring and firing, which has been a key issue facing the industry. Both center and states get significant revenues from real estate and petroleum products. So it's been a point of debate whether it is to be brought under the GST or not. And the challenge of private investment, the government is still unable to resolve in terms of that the private investment as a proportion of GDP is still not picking up. While the NPA recovery remains a big issue for the banks, the recovery from the written-off accounts have also been below potential. It's been only 10%. For example, in the last 4 financial years, from 2014-15 till 2017-18, banks could recover only about 29,000 crores out of the written-off bad loans of about 2.72 lakh crores. On the employment front, the government's record doesn't look very impressive. The Labour Bureau's quarterly employment survey shows that about 1,36,000 employees were added in the July-September quarter, which is higher than 32,000 jobs created in the same quarter last fiscal. But still, considering the need of creating 1 crore jobs in the economy per year, so this is a very low run rate. So overall, the government's record has been mixed, especially in terms of containing inflation, containing fiscal deficit, attracting foreign investment into both projects and into stock markets, and the private sector investment is yet to pick up. The banking sector still faces a lot of challenges in terms of recovery of NPAs and improvement in credit growth. The monetary tightening by the US Federal Reserve and the recent outflows pose challenges on the macroeconomy front, which the government will have to grapple in the next year going forward.